All right, guys. Good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, May 21st. Kind of feels like a Friday, doesn't it? Tomorrow is Friday, and then we have a 3-day weekend. So, typically, we were talking about this in the pre-market session this morning, but typically Fridays before a three-day weekend, especially Memorial Day weekend, are very quiet. But I don't know if, given the current environment, if it's going to be as quiet as normal. It probably will be, I would think. 3-day weekends, Memorial Day weekend. So, anyway, tomorrow should be a fairly quiet day. Maybe a nice day to kind of leave a little bit early. But anyway, that's tomorrow, and of course we will have our live pre-market session at 9 o'clock every morning. We do that, and then of course we'll see if there's any trading opportunities because typically sometimes low volume days they can provide a little bit of some trading opportunity because sometimes things get whipped around a little bit. So we'll see how that goes for tomorrow. For today, I would call today theme of the day digestion day. I think that if you're surprised by today, then you may have a problem. I think overall the market is due for a little bit of digestion. Sentiment is running super hot, and we're down 1% for the day for S&P, but Nasdaq has been running much hotter, and if this is what we get, just like a little bit of a pullback. And by the way, I think that VPOC has been taken out for Nasdaq. It's a little bit different for the Qs, something that we've been talking about, this virgin point of control up here that is right smack in front of us. So interesting, Nasdaq has taken it out. A little bit different volume profile for the Qs versus Nasdaq, even though they're the same thing. They track the same exact basket, but obviously there's more volume at different places because of Nasdaq futures trade much longer than the Qs, just the cash session. So you're going to have a little bit of a difference there. But interesting, that does show that that's been taken out. So, I do think that we're really, we've been cooked, right? And I spent a couple of these end of day videos talking about, strategies to kind of help you stay in the game, in case we, you know, continue to act a little bit crazy and continue to kind of grind higher. But I think making sure that you're locking in profits is important. And of course, the video that where everything that we're talking about is for information purposes only, not giving out any recommendations or advice. But just being realistic. I think a lot of times with trading. So again, why do I think sentiment is super hot? Well, if you look at things, I've talked about the Citigroup panic euphoria model. Their market sentiment has been flashing euphoria for the last 2 weeks, which I agree with. And I like that model, but there's other things now that you can look at. If you want to look at the put call ratio, so we spent some time. We talked about as a member, I will do when I think there's something important to go over. I will send out a midday video, but this is the put call ratio, and so I spent about 10 minutes just talking about what to do and strategy at this time. So I'll rehash a little bit of that for you. But so what is this telling you, right? People talk about the put call ratio and they talk about some other sentiment indicators. When something is down here, right? And this, of course, everybody was buying puts up here, right, at the wrong time. So that's why this is really nice as a contrarian indicator, right? Everybody buying puts at the wrong when the market bottomed. Everybody buying calls down here. So we don't know if this is a market top or anything like that. And price for me is the most powerful and the most important indicator. But if somebody's giving you like a tap on the shoulder saying, hey, watch out here, everybody is being complacent, that's basically what this is doing, right? That's the analogy that I would use, is that the analogy that I would use is someone's giving you a little bit of heads up that the market is really complacent right now. Just as back here, when everybody was buying puts at the worst exact time, that was a great place to go long. Hindsight 2020. right? And every time the when everybody buys puts, the market does the opposite. Well, sorry, I shouldn't say that. That's being a little bit too general. But a lot of times when everybody's buying puts, people are usually doing that at the wrong time. Right? Does that make sense? So I think that should give you a good sense. So right now, where's the put call ratio? Well, it's much lower. So we need and every time one of these little spikes has come in, it's been a pretty good buying opportunity. Right? When did this happen? This was on 5/1. So if we go back, and I could put the SPX in here. I should be able to do that to make it a little bit simpler to see. But you could see the market dipped here, and that coincided with the put call ratio getting above, close to 1. And again, this is the equity put call ratio, right? And here you go, right? Here was the put call ratio when everybody's, but remember, puts are in the numerator. We made a bottom very close thereafter, telling you that this was coming. It wasn't exact, right? The timing wasn't perfect. So same thing here. Like it's telling you this. It's flashing. Whoop, whoop, whoop. Are you are you going to do anything with the put call ratio this low? Now let's translate. Let's give a little background to this too. If we happen to see, and that's why I said if the market just kind of sells off a little bit, and the put call ratio tends to spike up a little bit where people are buying more puts, that would kind of remove that complacency, and those make a better entry point. So that's kind of my feel for that, to kind of use these again. Every one of these things that we go over, it's like a little piece of the puzzle. And what I talked about too was some things, right? Again, I won't rehash the whole midday video because that's for members and so on and so forth. But the way that I look at it is the problem with most traders, and this has happened to me too. So I put myself in that bucket too, and I have to realize that is a lot of traders make money all on the way up and so forth, but they don't limit their losses on the way down. So I'm not saying that we're going to do one of these, but let's say we check back. You want to be able to kind of preserve the money that you made. Now there's multiple things that you can do. You could of course stop trading as much. You could still trade but put on smaller positions, realizing that the risk is a little bit higher. You can own less positions. So if you normally carry 5 to 10 positions, maybe you only carry a few, right? Or you could take everything off if you're really conservative. Because here's the thing with option flow. Option flow is not going to give you a heads up. For the most part, what we're seeing on a daily basis is a lot of momentum, and that's what we've seen this week. Like a lot of momentum, short-term call buying. They're basically going after names, right? We saw that yesterday with Intel, with Facebook. So no one's gonna tap you on the shoulder and basically say they're just gonna stop, right? They're just gonna stop buying and stop going after, stop with that momentum call buying. So that doesn't really give you a heads up. Every once in a while, you will get a heads up. There'll be a lot of put buying on the tape before the market goes down, but not always. So that's why we kind of look at things. So, and then the other thing is to look at things in terms of a risk-reward perspective, right? How much do you think, is it better to add a whole bunch of risk up here while this VPOC has been taken out? Or is it better to kind of sit tight a little bit and wait for a better entry? For the majority of your, again, so we're looking at the overall market, and we're making a little bit of, we're talking about a little bit. And again, the market was just down a little bit today. So I think that again, I'm not predicting that there's going to be a big washout in the market. I'm just saying the reward is not great. The risk to reward situation is not great when we have the put call ratio and sentiment this high. So anyway, that's a long-winded explanation, but I hope it helps. So for today, what did we see today? So there was still and the other thing that you could do is also trade more day trade a little bit more, and that's what I did with the Sonos today. Sono. This is one of the nice things about being able to read the tape, and find opportunities intraday. But this thing was up 19.5%. So here's what I did in this. If you go into our trades, again, I always show all the trades that I'm doing. I traded a little bit of Expedia last night. Sonos, and I'll go over my losers too, because I had a loser in Microsoft today. Yeah, so Sonos, right? So we had set this thing up, and if you go into our market webs, our chart channel, but it's basically, I'm always looking for the path of least resistance. So I'm looking for things to get out of value, right? Once they're in value, they're in range, they're range bound. So Sonos, we started to see calls hit the tape, and it just started to make this move above value. So this was nice, and I said I'm going to target 11.15, not being greedy in this tape. And if we go to the 1 hour chart, wait for it, you can see that was taken out. Now, and notice what we did here. So this is a lot of times how VPOCs work, Virgin Point of Control. We took this thing out, we faded a little bit, and then we're back above, because there's more of these above here for Sonos, if you like this name. For me, I'm happy just with a scalp, because I don't know the name well, and therefore I'll turn this setting off here. Just turn labels off so you can see the price. Seeing the price, of course, is the most important thing on your charts. But you could see that we took this out, and there's another one. There's several up here. So again, I'm happy with just a quick scalp. It's not a name that I trade that often. I'll go over my loser today too, Microsoft. On the first, and again, this is a good testament where I probably made a mistake on this trade. I've been noticing that Microsoft hasn't really participated too much the last week or so. It's just kind of been sitting here. And again, look at the VPOC takeout. So notice how there wasn't any VPOCs below here. We took this thing out, and it's just been digesting afterwards. So this, going back to Qs, this is what I would expect. I'm not saying this is definitely going to happen, because we see other outcomes, but we take this thing out, maybe we digest for a while, like Microsoft did. So that's my thought for this. We've digested. Where my mistake was, and again, I like to go over the mistakes. This is important stuff, just as the winners are. I know everybody touts the winners, but this did not close. So I was looking for, look at all this digestion here above value, and it just, by the time the 1 hour bar closed, I did not get the break above, and it just sat back in the range. And it's still hanging around. It's still holding this top of value, but I ditched the trade. Why did I take that loss? Because it's not doing what I thought it was going to do, which is break higher. So, yeah, it's a little bit painful. I even added to the trade, and I just said, there it is. Yeah, I got out for 420. Out of Microsoft for now. It just doesn't seem to have it today, and it did not close. Again, waiting. It's tough to wait for the bar close on a 1 hour chart, but on the 5 minutes but if you do wait for the 1 hour, it's better, in my opinion, to start a trade once the bar is closed, because you have all the information. We see so many fake outs from time to time where the bar looks like it's full green, and then by the time it closes, it does this. So that happens. It happens to me. It's tough to wait a full hour, because sometimes you'll by the time the bar closes, it could be up here. All right, so that's Microsoft. So again, I like to go over the winners and the losers. I know nobody has any losers on Twitter, no, right? What else? There was another trade that we did today too. Oh, Boeing had some strength to it. and all kinds of momentum call buying in Boeing today. It's hanging in there. Here's what the hourly chart looks like. So nice move. I made a little bit of money and then I rolled the calls. I'm looking for a move in Boeing up to 152.70. I always get the question, because I'm not showing you the option flow. What calls did they buy? Does it really matter? So what they were doing, and but I always get the question, oh, which ones were they? Like that's going to make a difference. Again, for me, the option activity is just a sense of short-term momentum, and maybe a little bit of positioning. But for the most part, they're going out like a month in. So some weeklies, some next week, and some June calls traded today for Boeing. All short-term stuff. But some people, I think they think it's like magic beans, the option activity. And so anyway, I'll move on from that. Um, so that's Boeing, and then the last one to talk about was Tesla. I was long. So this is an interesting trade that I did. So Tesla, again, it's right in the middle of the value area. It's sometimes I think some of these names have to get through the month because the value area is just so long. It's so, excuse me, it's so wide. But it gave us a nice little trade for the day. Now it did sit back. So here's how I traded it. I think also one of the things that I see from time to time is that retail traders, don't utilize spreads. They just want to go after straight calls and puts. It's sexier than to do a call spread. I get it. Um, but a call spread can really kind of help you a bit to manage your risk a little bit so that you're not outlaying so much. Where was the trade that I did for Tesla? I think that was on Tuesday. We'll go back in here. It had to be Tuesday. Here it is. Right, so I put on this May 22nd, so this week's call spread. I put that on for $5, $15 wide call spread for 510. So again, remember the strike, 825, 840. Right, so I put that on again Tuesday. Since Tuesday, what did this name do? It's been a dud. It's been in value, right? It started the week above value. There's been really no signal. Try to get above value. So what I did, by this time, 2 days later, in a weekly call spread, the dollar amount of the call, both the long call and the short call, has gone down a lot in value because of the time value, right? It's a short-term option, and if the name doesn't move, it decays very quickly on you. So what I decided to do, I saw that Tesla was coming to life a little bit. And again, the reason why I'm going over this is because I think a lot of traders just don't know how to do this. But I said, hey, I'm going to get out of, whoops, this is back up here. I said, hey, I have a call spread on from earlier in the week. I covered the short portion of the spread, right? So that's the 840 call, and buying that back for just $1.50. And now I have an outright call. So again, they've both gone down. Probably that spread was when I paid for the 825, 840 call spread. Probably the 825 strike was probably about $15, or sorry, about $10, and the 840 spread was probably cost about $15. So net, it cost me $5. But now that the Tesla didn't do anything, I can actually take off that short portion of the call for a very small dollar amount, right? And now I'm left with that 825 call, and now I'm not capping my upside, right? That's the only issue with the call. One of the issues with the call spread is that the most that you can make is the width of the spread. This sense, if I'm savvy here, and I think I was, I unwound the short end of the call because it was drastically lower in value, and now I'm just left with an outright call. So I was able to take this thing off, the 825 call at 310 for $10. Now I had to pay the 150, so you have to add this on. Now I paid to the cost, so basically I had a trade that was marking at $2 today, and I was able to get out of that for The net cost ended up being 660, and I got out at $10. And then, so that's $4 per contract. What I did was I rolled that profit into another call spread. Right, so now I'm in a little bit higher of a strike. But again, look at, I mean, to get that exposure, now I can make, up to $15 if it happens to really rally, which we know Tesla can do that. And what I did was, before, so I was using our indicator to tell me where to take profits. But I got this question in the trading room. They're like, "What are you going to do with this thing?" Well, first of all, we want to see this get out of value. It just hit this resistance, right? That's R1. So I was looking at this for a second. I'm like, can it get through R1? Well, it can, but I'm like, you know what? Take some of it off, and I did that right at that R1. Right, and that's basically so the market webs really help me say, hey, dummy, take a target. Don't shoot for the home run. Take some profits, and then you could play with the last portion of the trade for the home run, if you like. This is what I tell myself every day. All right, guys. So that's just a quick recap. I'd like to go over some trades with you, and I've got that trade. I've got the remainder of the trade on for tomorrow. But again, I'm messing with the profit. So if it doesn't work out, okay, I'll give back some of my profits. Not the end of the situation. All right, guys, so we'll end it there. And again, I like to kind of give you a view as well. Now, if you're playing this game correctly, I'll leave it on this note, and you've unwound a lot of risk yesterday or even the day before, you want this market to come in a little bit. Maybe it comes in, and then you can reload, right? And that's how you continue to trade profitably and trade very well. You try not to be super greedy when you see things like the put call ratio get where it is. Another thing that you could do as well, I talked about having less. I forgot to say one thing. If you, I mentioned about like reducing positions as well. You could also take money out of your trading account. I did this in January. I talked about doing that. I mentioned it 3 times in the trading room because we were doing so well. I said, well, do yourself a favor, take some money out. And I did that 3 times. I did it twice, I think, in January and once in February. And I'll tell you, that saved me a lot by not having the same amount in my account. You can't risk as much when you do that and when you lock your profits in like that. All right, guys, have a great night, and I'll see you tomorrow.